All right. It is November 22nd, 2020. I'm taking a look at what's been going on in the news with all of us, with the sudden influx of retail investors, people that are investing in cryptocurrency, people that are investing in the stock market, the bond market, who um, recently started since the coronavirus. Um, and the conclusion that I've been coming to, and I have been since March, is there is going to be a meltdown at some point. There's going to be a pullback, a correction, whatever you want to call it. It will occur soon. Well, I'm not going to say soon, but it will occur at some point. So looking forward, people are going to lose. I think they said 12 million, 21 million people will lose their benefits, their PUA and unemployment benefits in December, the day after Christmas. So unless Congress comes up with further stimulation for the economy, there will be a substantial pullback in the stock market. I'm not so sure about the crypto market. I'm not so sure about the precious metals market. But definitely in the stock market, because the availability of money for the majority of people will not be there, and at some point they will have to sell those assets in order to maintain their lifestyle, unless we start the financial engine, and put the pedal to the metal. But at this point, I really don't see how we can. It's going to probably take at least twice as long to get the economy moving as it did to get to this point. So that's at least 2 years. Unless unless we just have the type of stimulus package where the businesses are reignited, but people still have to get caught up on their bills, reinstitute their supply chains, acquire new real estate or new locations to work out of for people who have had to give up their establishment just because of the financial uncertainty. So looking at that and looking at the growth in the market, which I believe was mainly fueled by people having money and know where to put it. So that means that people were receiving an income, but you don't have the bar to go to anymore. You didn't have, for a period of time, you didn't have the restaurant to go to. You couldn't go on a vacation. You couldn't go on a cruise. So you had money, but you didn't have anywhere to allocate it to. So people chose to allocate it into the stock market, the bond market, Robinhood, and Webull and all those kind of places, who made it easier for people who would not traditionally be in the market. So when the market pulls back, the next question that you wanted to ask, and that I want to ask, is, okay, so when it pulls back, how far does it pull back? And then about what time frame is it going to pull back so that I can prepare? When I say prepare, I mean prepare in two ways. Prepare in one way, which is when the streets are covered with blood, meaning that when the market is down, this is when we buy the things that we want. that were too expensive. Like right now, I feel timid about buying into this market because it dipped, and I did not buy the dips as far as stocks. I'm not a big stock guy. I'm more of a cryptocurrency guy, but I do stay up on what's going on in the stock market, and I do study the stock. I do study the stock market businesses, but I just use crypto because it has. I like the way the gains move a little bit better, and I have a better, deeper understanding of it because I've been with it since birth. It's like my baby. So, but what I'm going to say is the there's going to be a pullback. Me personally, I would be afraid to buy into the markets right now. I'm afraid to buy into even some of the cryptocurrency markets right now because I just feel as though we're on a bubble, but I'm not sure what type of bubble it is. Is it the type of bubble that just bursts, bloop, and it's gone? Or is it the type of bubble that just slowly diminishes in size, sometimes comes back up in size, or does it just bloop and it's gone? So I'm of the mind that the way the stock market works has changed for the way the stock market is mentally accepted by the masses. The idea of interacting with the stock market has been demystified. Let me put it that way. The idea of trading stocks and bonds and cryptocurrency not so much. It's still mysterious, but the stock market has been demystified because the retail investor can buy on their app. Now, the only parallel that I can draw to this is 1929, the crash in 1929. And so I did some research on the crash in 1929, why it occurred, how it occurred, under what circumstances it occurred, and what the frame of mind was at that time. And it wasn't an immediate pop in 1929. It was a bubble, and it would deflate suddenly, bloop, and then somebody would come in, one of the major profiteers, and prop it up, and it would bloop, fall back down again. But it didn't just pop and disperse and disappear. So I'm thinking that it probably will not just pop and disperse and disappear, and the market will become flat. But what I am thinking is that the retail investors without the stomach to ride it out are going to lose because a lot of them are not skimming off the top of their gains, because this is probably the first bull market for a lot of these retail investors. So they believe that what goes up just continues to go up. They don't understand that what goes up must come down. You know, that water will seek its own level. So in my mind, projecting out into the future and projecting out my investments into the future, I'm saying, okay, how do I position myself to capitalize on the water finding its level? And if I can figure out what that level is, I can set my buy-in points. And if I can figure out what that level is, I can figure out how far away from that level above it is my sell points, where I feel comfortable getting out. Now, let's just speak on the Bitcoin market. Currently, Bitcoin is at 18,613. Do I feel comfortable buying in at 18,613? For profit? No. For long term? Yes. Do I feel comfortable going in on Litecoin to 85.31? Not so much. Litecoin was above $100 for a short period of time, but mainly Litecoin has been in the 40s and 50s for the last couple years, 40, 50, and sometimes 60. But the 85 is touching the areas where it hasn't been in quite some time. So the philosophy still has to remain the same if you are doing long term, which is you're just going to have to DCA in. So I hope that answers the questions that I've been receiving about, is it still time to go into the market? Only go into businesses and assets that you believe in, and dollar cost average in, meaning you buy a little bit every day, a little bit every week, a little bit every month, and then over time you will accumulate a sizable portion of that asset. And if it does touch certain highs, then you sell off. If it does touch certain lows, then you try to jump in and reach and accumulate during those lows. But aside from that, the market's a little bit it's steadily moving upward, but sometimes upward can be scary because you can get stuck holding a bag of Bitcoin, similar to the 19,600 break in Bitcoin 3 years ago. As far as businesses like Tesla, I don't believe that Tesla is overvalued. I believe that Tesla, based on everything that it's been doing and accomplishing and succeeding at, is undervalued for a long-term hold. But I don't know what percentage of you guys are interested in long-term hold versus trying to use the stock market as a way of generating income. Right now, you possibly can generate income, but at some point you are going to be left holding a bag, because if you're constantly buying and selling, you're buying and selling on the price of that day, and at some point the price of that day is going to be higher than what you'll be able to sell it for. So just be cautious out here during these times. Be sure and check out uixnetwork.com to stay up to date on the latest cryptocurrency, stock market, business, and financial news. I'm out of here. Peace. Trade carefully.